trading strategies and ideas. Part of the idea of this portion of the show, guys, we're going to have a little bit dedicated to improving everyone, giving everyone a little bit of a basis to start their careers with. And in this case, we're talking about very basic, very simple strategies that with a little bit of homework, a little bit of back testing, you know, you can go into the market with and really follow along with great results and see improvement right out of the gate. Today, we're talking about, that buying the dip type idea, but we're going to put a little caveat here. We're going to go out to a higher time frame, guys. Find those significant price levels and look to enter trades versus those significant price levels, using them as support. So we're talking about higher time frames today.
Okay, yeah. I mean, thanks, Brendan. And I think buying the dip, first of all, very, very important. Obviously, Arun, you never want to buy something at its highs. That's never good unless you think it's going to go higher. But you know, that's the one thing. So we're always trying to look for some good values. You find them and then you hold them, right? And again, it's going to be based on whatever your sort of risk tolerance is here. I'm going to go back and I'm going to use a daily chart here. And this is an example that we've given on the show and an example that I've tweeted out here a couple times. And that's just going to be Nike. So again, I think the most important thing about buying the dip is you first start with a quality company. You don't want to buy the dip of a stock, you know, like a Clover, or not that these aren't quality companies, but these aren't companies that have been around a long time. You know, if you've been buying the dip on Smile Direct or something like that, the dip may continue. So you got to look for key areas, right? And you got to look for key areas of support and also start with the right stock. So we knew with inflation coming in that Nike probably would get hit on some of that talk. Their report right here, they come to the downside and then stops right on the 200 period moving average. That's not good enough for me, normally the 200 period moving average. So we go back and we just try to find out, is there an area of support and or resistance back here? So this actually lined up perfectly, and we put in a decent position here on Nike right here at 145 and change, because we had that support back here. It was resistance, now turned into support, because when we broke through there, it was like, see ya, all the way to all-time new highs, right? So this little level of concern there turns into support. So you get that bottom of 145. Nike comes in, touches this level, and then straight up to the upside here. And then where you get out is up to you. I'm still not out of this. We'll see where it goes, but you know, you can always get out at past highs. We're gonna let Nike go. I think this is a good name into inflation. But again, with digital's sales going higher, Nike, a well-known brand. We have the Olympics coming up. There's more and more catalysts here for Nike. So for me, buying the dip goes back to 200 period into a quality name where we can find some past support and or resistance. So for me, that's Nike, was a good one there. And you do have to dig, Arun, to find some of these. It's not super easy. You just don't pick every stock to buy the bottom. You have to pick quality names.
Yeah, you got to pick quality names in the stock side, or you can look at the indexes as what I would do, right? I tend to trade indexes more often than not. In this case today, I haven't touched it, but I marked off some levels I want to keep an eye on. The way the market was trading earlier today, it was a little quiet, so sometimes you miss trades, and that's perfectly fine. But marking off levels so you can use them later is key. So one trade I want to keep an eye on. This is a 30-minute chart zoomed out. We're looking back into mid-October at this point. So this chart goes all the way back to October 14th. And what are you seeing in terms of structure? I'm seeing breakouts. Where are the levels? Well, let's just keep an eye on here around the 29th, going into November here. We broke out through 45.90 and into 4600. If you get past a certain point, which has been hesitating, in this case, from the 26th until we broke out through 46.90, that area between 80 to 90 was resistance. So expect that when it breaks, there's going to be support there, and you can trust the support in a market that's coming back down into it. So what happens on November 1st when the market comes back down from around 46.20 or so into that 90? Well, it catches that support. Old resistance is acting as support. In this case, there's already a consolidation breakout. You're looking to bid in front of that with support. You're marked off some levels. In this case, 45.60. Catch a bid. And then if you're swing trading this, and most of the time you are going to be swing trading. If you're buying into support, odds are you need to give it time for it to move. It's not going to just snap back immediately, right? It's going to need to digest a little bit, so the market comes back down a little bit, it digests, and then it moves. In this case, you saw the futures, it kind of flirted around 45.90, 4600, and then you see this take off in the next few days. Here we are at 46.70. That's essentially finding support, using it at a different time, and then making the trade and just leaving the order and letting it work out. This is how you would play that. Multi-day consolidation, breakout, catch the dip, put a bid down in front of that area, put a stop past it, and then here we are 60, 70 points later, and now the market's coming back in. Now, going forward though, since here we are on November the 10th, what are we marking off for levels? Well, we have 47.15 or so I would call to the top. We have that 46.90 that I had called this morning, and that 46.75 is going to be resistance going into 46.90. So for future reference, if this market were to come back into that area, expect resistance, possibly a short in front of those levels. And that's how I would play it. Just keep an eye on the levels, and then if it comes back up to it with a decent amount of activity, then you can go ahead and play it, because these are multi-day levels. They're not just levels that I'm marking off today and going to remove tomorrow. I'm going to leave them on until they get broken. In this case, it does look like that 75 into the 90 area is going to be something I want to keep an eye on going forward.
Remember, with any strategy, guys, we want to make sure we're doing our homework. We're back testing. We're gathering enough data to be confident in the idea. And it's just a simple adage of where once was support, turns into resistance, and vice versa. So if you're looking to trade a very strong stock, we're looking for those higher time frame levels where in the past might have been a point of selling that then turns into buying. You can count on it as support. So a little look there at higher time frame significant levels and buying the dip, guys.